We have one of the most massive crypto documents in the United States in the past handful of years that just came out yesterday. Essentially, United States national banks can now legally hold crypto on their balance sheets and much more involved with that. Brad Garlinghouse, David Schwartz, and more from Ripple talking about, well, let's say they framed it as a thought experiment on changing the XRP ledger from essentially a pre-mine of XRP to a proof of stake network, and some interesting responses around that. We have all sorts of financial products across crypto going live any day now. Some of those announced, from Grayscale to Bitwise and more with XRP. We have Kraken Exchange giving a shout out to the Hedera ecosystem. We have an interview I just did with the head of product marketing at the Solana Foundation. Yes, that is correct, and much more. So without further ado, I'm going to hop in because there's way too much to get into. If you like this content, please like and subscribe. I didn't make a video yesterday because I was too busy, and to be frank with you, I mean, I don't know. I was just too tired to make one. Anyways, this document right here, I want you guys to pay attention to this because it is absolutely kind of ridiculous. This is arguably some of the most consequential U.S. banking guidance for crypto since 2020 and 2021. And the former documents that I'm mentioning there are from OCC's 1170 TAC 1174, if you want to look that one up. But this one here just comes out within the past day. And OCC confirms bank authority to hold certain crypto assets. So let me just run through this real quick. Native crypto assets by banks may be held now as principal on banking or the bank's balance sheets for the purpose of paying network fees. This breaks the prior barrier where banks could only custody crypto for clients, not hold it themselves. This is the first explicit modern U.S. federal acknowledgement that a bank can hold, let's say, Ethereum to pay for gas, or XRP to pay for gas, or HBAR to pay for gas, or Bitcoin for network fees. A bank can hold HBAR, ALGO, XTC, Solana, whatever. These holdings are, as of this document, permissible banking activities. This is legitimately a historic shift compared to what we've seen in the past. The OCC connects this authority to banks. Banks can act as validators. They can operate nodes. They can run transaction processing. They can do smart contract executions now. They can sit in between stablecoin payment rails. This letter right here greenlights the operational participation of national banks in distributed ledger technology, aka blockchain, aka crypto systems, which previously existed in a legal gray space. This is absolutely massive. You can read through this. It is public information on occ.gov/news and look at the most recent announcements. And this just came out. So I want to give a huge shout out to Saucer Swap. I've seen a lot of these Mika white papers over the past couple of months. I think that's more likely than not. This is probably a requirement for some sort of exchange listings. This is not financial advice. It's just what I've seen, and it seems to be kind of what's spurring a lot of these Mika white papers. If you're not aware what Mika stands for, it's markets and crypto assets. This is some of the legislation that at least has some sort of clarity coming out of the EU. Constellation also had a Mika white paper recently. And I'm sure there's many ecosystems that I'm probably not thinking of. But Sauce is Saucer Swap on Hedera, Hedera's biggest DEX. But that was yesterday. And also simultaneously, they listed on Coinbase's base DEX. Again, I do not have a financial relationship with Saucer Swap. Neither does Genfinity. Just noting here because I think it's big for adoption. I don't know why I said adoption. Adoption. All right, this came out of Deutsche Bank. I found this yesterday. Didn't make a video here, but I think it's big enough to present to you guys. This is Asset Tokenization 101, one of the largest banking entities in the world, talking about everything that you need to know about asset tokenization in just 10 slides. You can go to dbresearch.com and find this as well if you do targeted PDF searches. Talking about the Genius Act for stable coins in the U.S., how 2025 has been a pivotal year for tokenization. Market share of tokenized assets, stable coins, and pretty much ruling the roost right now. What is asset tokenization? Market size, which we talk about all the time, just a drop in the bucket. In 2025, the market size of tokenized real-world assets is approximately $33 billion. Including stablecoins, the total tokenized asset market is $331 billion. Growth is likely to remain uneven. If you go back just a few years, I think 2021, you're looking at 200 million. Right now, we're sitting at 33 billion, and we see estimates going all the way to 40 to 50 trillion by 2030 by some of the largest entities on the planet from a banking institutional grade asset management standpoint. Tokenized capital markets could become the default infrastructure for issuance and trading by the 2030s. Let me read that again. This is coming from Deutsche Bank. Tokenized, that means on crypto, on blockchain, on distributed ledger rails, capital markets could become the default, the baseline, the basis used for everything, infrastructure for issuing and trading by the 2030s. Pretty ridiculous, right? You're talking about multiple trillions and trillions and trillions, and it's talking about banks adopting DLT and all the other jazz within that. Institutional adoption. Tokenization will unlock significant value. It's just the same bullish stuff over and over again. This is kind of in vain with this document I found. Crypto got everything. Crypto got everything it wanted, and now we're all sinking. But anyways, let's get back into the Deutsche Bank research. Bond tokenization has the strongest growth potential. Short-term adoption, tokenized funds, gold leading the early market adoption. Medium-term, equities. Long-term, tokenization of private credit and real estate. We talk about real estate on this channel, $300 to $400 trillion. Regulation is the biggest barrier, et cetera, et cetera. And essentially, you have senior economist at Deutsche Bank in London and an analyst at Deutsche Bank's macro and thematic team in London. Pretty cool document. All right, I wanted to bring this up briefly here. I found this just like really quick. Electronic bills of lading, international group of P&I clubs. What is this international group? 80% of all ocean-going tankers involved in this. 65,000 group-entered vessels for electronic bill of ladings. And it's talking about opportunities presented by e-bills or electronic bill of ladings. Again, yet another industry that we talk about that is going to be impacted by crypto and DLT. And you can see right in here, emergence of new tech and opportunities, distributed ledger technology, reasons to switch, security costs, speed, reduced reliance on, I think this is letters of intent or letters of something, some sort of essentially handwritten thing. And for those that aren't aware, I mean, the supply chain and logistics industry, there's still legislation out there that requires hand-signed bill of ladings. That legislation goes all the way back to the late 1800s. So when we think about digitization, blockchain, distributed ledger technology, it certainly deals in multiple industries. This is some history and context behind this group approval, and it gets into, I mispronounce this all the time, UN Citral Model Law of Electronic Transferable Records. This stuff is lighting up all across the globe, something to 1000% be cognizant of. Digital documentation laws, because this is going to tie in crypto and distributed ledger adoption directly. So I found this, and then I'm randomly doing something or doing a search to see if anything with XDC is related in here. Full disclosure, obviously, Genfinity has a media relationship with XDC Foundation. I don't personally, but just giving you guys a disclosure anyways, because they've been, deep in the weeds with supply chain, digital documentation, electronic, all the electronic supply chain and shipping and logistics stuff. And here is something that I found. The trade finance platform on XDC Network, XDC Trade Network, alongside their partner Yoda Plus, which provides blah, 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 has been shortlisted for Best Cross-Border Trade Software System by the Center for Digital Trade and Innovation, led by the International Chamber of Commerce. And you can see this right here. Coming out of the ICC, which I thought was pretty interesting because it talks about some very, very similar stuff here. So anyways, pay attention. All right, Franklin Templeton's XRP spot ETF now officially registered with the SEC. Again, this is that Form 8A that Canary Capital just recently got across the line. We know obviously Canary Capital's spot XRP ETF now on the NASDAQ as of, I think that was like last week, breaking all records. I think it just nudged out Solana's spot ETF by like $1 million or something like that. But more products coming down. I also found this Amplify ETFs launch, the Amplify XRP 3% monthly premium, blah, 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 income ETF. There's some other stuff with XRP here too. Let me see if I can find it. All right, a bunch. There's like enough to actually just go through a timeline. Grayscale XRP Trust ETF is coming. This is coming out of Grayscale. I think there's a Bitwise one coming. And yeah, Bank XRP, Bitwise CIO Matt Hugin, which we've interviewed in the past. So a lot of kind of products coming down the pipeline. The SEC has announced that it has dropped crypto from its 2026 kind of investigation priorities. Obviously, there's always going to be some overlap with investigations, but Kraken also filed a confidential IPO registration with SEC following $800 million funding round. Circle's X reserves, talking about blockchain interoperability with USDC-backed stablecoins. You can go and look at all of this stuff on genfinity.io. Speaking of Genfinity, let me see if I can find it. I just did an interview with Solana today and published it today out of Genfinity. This was not a paid-for interview. Was supposed to do an XRP versus Solana debate, but we had the XRP side drop out, unfortunately. But did maintain and try to get an interview scheduled with Vibhu. He is the head of product marketing at the Solana Foundation. It's actually a really good interview. It's like 45 minutes long. It does definitely talk about Solana in some regards, because obviously that's where his head's at. That's where he works. But a lot of deep insight on the state of crypto, talks about decentralized science, talks about DePIN, all sorts of other things that may not be as sexy as some of the stuff that we talk about, or that is polarizing, or price predictions and stuff. But it was a really insightful interview. I really liked it a lot. I hope I get to do, more of them within the Solana ecosystem and with Vibhu, because he knows a decent amount of stuff about, similar to, I guess, I certainly don't pretend to know everything about anything. But I feel like I know a little bit about a lot of different things at this point in time, and I feel like that's kind of where his head is at as well. Interesting stats that he mentioned. I think that there was a project that he said on Solana right now that was bringing in $1 million a day in revenue. $1 million a day. And I think another one that he mentioned is that in the past like 18 months, there's been 3 projects that have launched or platforms that were the fastest growing startups like in the history of any industry. I'm sure one was Pump Fund, which, I mean, regardless kind of your thoughts of what Pump Fund represented, the growth was ridiculous to watch. And then the other 2, I forget. But again, you can watch this interview. I thought it was a really good one. All right, this came out, again, as I mentioned here. XRP Ledger was created in 2012. This is David Schwartz. This is a RippleX individual. You also have Brad Garlinghouse, all of them talking about theoretically what would happen if the XRP Ledger moved to a no incentive is the best move type ledger, which David has said, to a proof of stake ecosystem. He's talking about his own thoughts. This is David on governance and consensus models having evolved. He's been mulling over how XRP is used in DeFi, both organically and with apps and protocols like Flare, Axelar, Doppler, etc., natively on chain as well. With programmability initiatives and smart contract discussions underway, it seemed like a good time for them to discuss what other DeFi capabilities could natively look like. And this talks about, you get down here in here far enough. It talks about staking. For staking to be possible, they would need a source of staking rewards, a way to distribute them fairly. Well, I mean, I think everybody knows where a source of staking rewards would come from. But yeah, I mean, it's pretty interesting, because it seems like it is I don't want to say a shift, because it is. If they would have definitively came out and said, yes, we're moving to a proof of stake network, I think that would have caused a lot of waves. I will say it's very interesting to come out and be like, this is just a thought experiment. Like, it's easy to do that, right? I mean, Twitter is like kind of the crypto, X is kind of the crypto town hall. But yeah, I think Wrath of Kahneman had a good tweet on this, which is the most obvious implication of XRPL staking is that Ripple has the most XRP to stake, or Ripple has the most XRP to divvy out. I think you saw the Ripple X individual saying we'd have to figure out where staking rewards came from. Well, maybe the war chest. But staking would validate. This is Wrath of Kahneman. Their influence, Ripple's influence over the ledger, obviously, and structurally, instead of the awkward, decentralized, but we kind of run it vibes. Amendments, easier to get in if you outstake, et cetera, et cetera. Okay, and now David responding directly to Wrath here saying, that's why my staking proposal leaves policing whose stake is accepted to the validators. While this solves a problem you mentioned, it allows slashing to be used only as a last resort. It does create a new problem of validators possibly only allowing their friends to stake. Okay, yeah, I got it. Forgive me, I haven't read your proposal. What measures could be implemented to protect against this and validator collusion? And then David saying, I don't think I've made the whole thing public, but the preferred implementation creates a new thing called a governance token, which would be intended to be worthless and would have special rules to ensure its circulation is limited. It can't gain value and can actually be used to control holders by voting. Anyone can create and distribute a governance token, and once created, the holders manage it as a new way of maintaining the unique node list. To fork the network or to deal with malfeasance by the current governance token holders, you create a new governance token, and those who want to be on your side of the fork configure their server to follow your governance token. Guys, this is a lot to read. You guys can go and read this if you want to. This is a big open thought discussion around the XRP ledger essentially, having some sort of proof of stake mechanism. But I think, I guess my broad comments on this are I just shared last week or a couple weeks ago, there's educational documents about scaling the XRPL from node to node communications, like already out there in the wild that are being supported by Ripple's university blockchain research initiative. So, this stuff is going on, I'm sure, not only on XRPL, but across multiple networks. We see consensus mechanisms being updated. I will say it would be a huge shift for the XRPL to shift from essentially, like I said, kind of like a pre-mine to proof of stake network. I want to give a shout out to Dead Pixels Ghost Club, getting love from the Kraken exchange. These guys are OGs on Hedera, and I would argue they have the best gifts in all of crypto, the Dead Pixels Ghost Club. See if I can share some of them with you guys since I'm just sitting here. Yeah, they've got some of the best gifts in all of crypto. Anyways, OG NFT project on Hedera, and Kraken giving them a shout out. It's cool to see some tier 1 exchanges. These guys had crazy volume earlier this year too. They introduced a Forever Mint, and I think that actually some bigger platforms across other networks kind of took and hijacked the Forever Mint idea that Dead Pixels had first and kind of ran with it. Anyways, check out this Solana interview. I also did an interview with Brandon from HGraph today. Now, HGraph is essentially providing data insights and solutions on Hedera for both kind of retail and enterprise. You can go check them out at HGraph. I think let me see what it is real quick. Is it hgraph.io? Hold on. I'm rusty today, guys. Yeah, hgraph.com. They changed it. But they actually just created this MCP that essentially it's like ties in Claude and ChatGPT, but it injects Hedera data and the network kind of data in and of itself into a model where you can actually search and do things like you would in ChatGPT to learn about the Hedera network, to learn about like data insights for your company if you leverage Hedera in any sort of way. Anyways, this interview is not live yet, but it's going to be live tomorrow probably tomorrow. I wanted to kind of close with this. Crypto got everything it wanted, and now it's sinking. On January 3rd, it will have been I'm not reading an article, a full article behind a paywall. On January 3rd, it will have been 17 years since Satoshi Nakamoto, the pseudonymous founder of Bitcoin, first unveiled the crypto. The most popular crypto may not be old enough to be served in a bar across most of the world, but it has cemented itself in the global financial order faster than any other asset. In recent years, the crypto industry has gone from an object of mockery in mainstream finance and the target of outright hostility from regulators to being broadly accepted, even encouraged. Banks and asset managers are launching their own products, stablecoins, blah, 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 blah. And in October, Bitcoin's market value peaked at a heady 2.5 trillion in and of itself. This whole article is about what we've been talking about for, I'm sure, about the past couple of weeks. It's just wild that everything is happening with crypto. I mean, even the Solana interview that I did, Vibhu from Solana basically. What's interesting whenever you actually do kind of get into the weeds with other ecosystems, because I'm sure most people that watch this channel know that I've interviewed, even outside of Genfinity, that aspect, multiple other networks. They're very, very similar mindsets here. When people have been in crypto for a handful of years, they kind of see the writing that's on the wall. Even Vibhu was mentioning, like, he believes that at some point in time, crypto companies are going to swallow these traditional companies that exist, these traditional financial players, the traditional banking system, pretty much all of it. He actually takes more of a, it almost seemed like he was talking more about like a replacement standpoint at some point in the far off future, rather than like a value add into the current system, which I kind of go back and forth. I wonder if Swift and these banking entities are actually going to get replaced at this point, or if they're just going to make sure they maintain their seat at the table. And I could kind of go both ways with that argument. But again, I do think, the point stands. Like, it's crazy to me in 2025 with all of the crazy amounts of adoption that we have, that crypto is maybe it peaked for this cycle. Who knows? I mean, there's people that still say that we're in a bull run. There's people that tell you that XRP is going to go to some asinine price because ISO 20022 goes live in, 3 days from now, November 22nd. Buckle up. We're all going to be the richest people in the world in 3 days. So hey, if they're right, that's freaking fantastic. But at the end of the day, I mean, like, come on. I think that type of stuff normally just burns people. And then you end up kind of getting into this situation of like, oh, let's wait another 4 years. But anyways, it does seem like something's got to give at some point in time. You literally have the OCC dropping essentially like the most bullish guidance on crypto in probably like 4 or 5 years. U.S. national banks can now legally hold crypto on balance sheets. A bank can hold ETH or XRP or HBAR, or Bitcoin or whatever. The letter greenlights operational participation of national banks in these DLT systems. And that's a big deal. I mean, at the end of the day, I mean, there's a reason that a lot of these networks, and you see it with Ripple, you see it with Hedera, you see it with XDC, you see it with, pick a network. There's probably some sort of an example in almost every major network of private instances of these of the networks. I mean, on Hedera, it's HashSphere. We know that Ripple had a private version of XRPL for like trials and some of the CBDC stuff. From that, I even go back to that Lipus Advisors Hedera / Ripple document that we found, which I think was the first instance that we figured out that Hedera consensus service on MTEX platform is ISO 20022 compliant on MTEX platform. So that's where we saw like some of the private aspects of the XRPL too. But at the end of the day, like a lot of these enterprise and institutions legally, not only from the lack of comfort, but legally in certain jurisdictions could not do, go fully on chain with individual use cases, let alone their entire, company's operations. nor are they doing that in the very, very short term anyways. But guidance like that from the OCC, when it comes to the banks, it's like, okay, the banks can do all of this stuff now that we thought, and I'm sure that they thought they couldn't do either. Just last week, we mentioned SoFi. You can literally buy Bitcoin, Ethereum, and Solana at the start on SoFi, which is a huge banking, organization in the US, kind of a middle ground between traditional and digital bank. And they're just the first. And they mentioned multiple other cryptos, obviously, we're going to be on SoFi too. So it's just weird. It almost seems fishy that we have this much to be excited about for the future of crypto. And it seems like, are we going to be in a position where we have to wait another 3 years to really be excited about it? I know I'm not planning on, going anywhere. I know many of you probably aren't either, but it sucks. And it's kind of difficult to sit and slog through it because all of these financial powerhouses throughout the world are already here. Otherwise, we wouldn't be seeing the financial products that are launching. We wouldn't be seeing all the central banks and banks talking about going live on distributed ledger. And if not live on distributed ledger, at least interoperating with it. So something's got to give. Anyways, I hope you guys enjoyed this video. I rambled a little bit too long. This is a longer one. I didn't do one yesterday, so that's probably why. But do whatever the cool kids do. If you like this content, please like and subscribe, hype it, do whatever it is that you do. And I will talk to you when I talk to you. Thanks. Bye.